have no such obligation. So if I finish mentioning, if you don't fall in this line, don't go and deduct your landlord's rent and say that he's withholding tax. The man will take it up with you. All right. Now, the first type of tenant that is under an obligation to remove 10% of his rent before paying the landlord the balance of the rent as withholding tax is a company. All right, a corporate client, a company. All right. Now, any company registered in Nigeria or recognized by any law in Nigeria to be a company is under an obligation to deduct 10% of his rent payable to his landlord and to remit same to the relevant tax authorities in that environment. The second type of tenant that has that obligation to deduct 10% as withholding tax from rents due to his landlord are government ministries and departments. Right? So any government ministry or department that is a tenant in any building, when paying the rent to the landlord, is under an obligation to remove 10% of that rent and remit to the tax authorities as withholding tax. All right. The third type of tenant, any government parastatal. All right. All government parastatals who are tenants in any building have an obligation to deduct 10% from rent due to their landlords and to remit that 10% to the relevant tax authority as withholding tax. All right. Then the fourth type of tenants that has this same obligation are statutory bodies. Every organization created by statutes, all bodies, organizations created by statutes who are tenants in any building or in any structure, in paying rent, they have an obligation to deduct 10% as withholding tax and remit same to the relevant tax authorities. And last but not the least is any institution or organization approved for the operation of payee system, pay as you earn. So any organization that by law is obligated to pay payee tax, also if he is to pay rent, he also has that obligation to deduct 10% of the rent and remit to the relevant tax authority as withholding tax. Okay, so that's the first set of transactions that are covered by withholding tax. Another set of transactions where withholding tax will apply is payment of interest. All right, payment of interest on any monies, interest on monies, or payment of royalties. All right, Section 70, subsection 1, 2, and 6 of the Personal Income Tax Act, as amended 2011, provides that all transactions involving the payment of interest on monies and payment of royalties are to observe the payment of withholding tax. In other words, any person who is paying this interest on those monies and who is paying royalty is duty bound to deduct a percentage as withholding tax and then to remit same to the relevant tax authority. Now, the percentages are different for interest and royalties. For interest on a loan or money, it might not necessarily any kind of transaction where interest is paid on money, not necessarily loan only. All right. When it comes to interest on monies, the percentage to be deducted is 10%. All right. While when it comes to payment of royalties, 5% of the value of that royalty to be paid is to be deducted as withholding tax to be remitted to the government by the payer of that interest and royalty respectively. Okay. So, and then another set of transactions where withholding tax will apply is interest on payment of interest on dividends. All right, where interests are to be paid on dividends due to a shareholder, or better still, where dividends, sorry, not interest per se, where dividends is to be paid to shareholders by a company, all right, all transactions involving payment of dividends are to comply with the payment of withholding tax. So in other words, all companies that are to pay out dividends to shareholders are to deduct 10% of the value of the dividends as withholding tax to be remitted to the relevant tax authority in respect of such dividends payments. Okay, that transaction is covered by section 71 sub 1 and 2 of the Personal Income Tax Act as amended 2011. Okay, another transaction where withholding tax applies is payment of directors' fees. All right, where the fees of directors of a company are to be paid. All right, the law places an obligation on the body or company paying that fees, directors' fees, to deduct 10% of the value of those fees as withholding tax, which is to be remitted to the appropriate taxing authority. You will find that provision in section 72 of the Personal Income Tax Act as amended 2011. Okay. Now, section 73, it's a bit controversial. Section 73 of the Personal Income Tax Act as amended 2011 is a bit controversial in the sense that that section gives, some kind of general powers, which I personally consider to be too wide and capable of being tyrannical. It gives general powers to taxing authorities to, from time to time, direct the deduction of withholding tax in transactions not ordinarily covered by the Act. All right. Now, that power to spread their tentacles to transactions not covered by the Act might not be too bad, but the challenge is that Section 73 does not provide for a fixed percentage of this direction. So, which means that Section 73 gives taxing authorities wide powers, to